please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, the market's been very volatile today, and of course, while it's off the lowest point, but still it's going to go down as a bad day because it's still down about 0.5% on the Nifty, about 0.5% on the Bank Nifty, and about 0.6 on the mid-cap index. Advanced decline at about 1:2. Ashwani Gujral and Mitesh Thakkar with us for BTST calls. Ashwani, you go first. It's been rather volatile in last 10-15 minutes. Again, follow through missing on the upside as well. For PSU banks, for example, what's the call on index now, and what about individual stocks?
See, first call, I would repeat what I said in the morning, that it's not easy on the index if you are not an experienced trader doing this for a long time. So with that caveat, I think as long as 10,550 holds on, there is both buying and selling that's going to happen. But there's no real view that you carry long position on the index or short position, etc. And that we'll have to come back and see. And overall, what you'll get is, in a 5-day week, you will get all your money in 1 or 2 days, and the rest of the days, the market will go sideways on you. Having said that, calls right now, I would think Titan is a buy with a stop of 890, target of 925. Berger Paint is a buy with a stop of 280, target of 295, and Infosys is a buy with a stop of 1310, target of 1365.
Okay. By the way, today's been an interesting day for some of the broker/NBFCs. They're no longer pure broking plays, but Motilal Oswal is up 6.5%. JM Financial spiked high, much higher. It's kind of just done a little bit of a pole vault, and that stock's cooled off, but still holding on to gains about 5%. So interesting in a market which has been so range bound. Some of these stocks continue to do quite okay, at least today. Well, Mitesh, let's get your trades as well. What are you going with for the last half hour?
I had Asian Paints earlier in the day. I think Marico is also now showing signs of, it's been sideways for the last many number of days, but the intraday indicator setup is turning positive. So buy with a stop at 329, look for 345 as your target, and Infi Beam is a sell with a stop at 153 for targets of 145.
Okay, yeah, I'm quite a bit of surge in some of these paint names, really. I mean, Ashwani spoke about Berger Paints. Let's just pull out the intraday chart of both Berger Paints and Asian Paints. They are right now making highs of the day. That's of course Berger Paints up 1.5% on that stock. Asian Paints as well up quite a bit, and of course Infosys really is the big stock now, so that one up about 2.2%. Deepak, before we thank you, any thoughts on some of these paint names? Good buy here, or would you avoid?
Was that for me?
Yes, Deepak.
Anuj?
Yes.
Oh, sorry, yeah. So the paint name is quite interesting. I think, the structure here overall is Indian paint companies in general are very expensive, but there is a tremendous competitive advantage that many of them, have, especially Asian Paints. And I think, to a certain extent, a lot of premium is being given for that. So now from a perspective of the medium term, this is actually a bad season for them right now, because in the monsoons, the paint sales will not usually be much, but I expect that as real estate slows down, there is a replacement component that kind of impacts or helps paint companies in the longer term. So I believe you should have a paint exposure for about 2 or 3 years from now. But again, given the fact that valuations are rich, at least at the Asian Paints level, I would still invest over a small period of time rather than immediately. But I expect that these companies will continue to deliver very good positive results, possibly 15 to 18% growth.
Okay. All right, Deepak. Thanks very much for your view on the paint companies and all the other stocks in the market that we've discussed. We'll touch base again shortly. Right now, it is time for Midcap Mania. As promised, let's see what Nigel is covering this week.
Well, the broader markets, there have been a lot of pain out there. So first, a disclosure. This is not really a stock recommendation. The stock that we're trying to explain to you is Lakshmi Electrical Control Systems. Small market capitalization, 150 crores, so even more dangerous in this kind of a market. But we found it a tad bit interesting. From the top, the stock, in fact, has seen a correction of around 30%, but not to say because from the lows as well in the last 1 year, it's seen a rally of around 30%. You need to be very, very careful nowadays with these smaller cap companies. So one factor is when they have cash in their books, they don't have debt. So that is something that really stood out. And the second factor was they're making better profits and they're paying dividend as well, guaranteeing you that at least, yes, they are making profits as well. They have two segments. One is electrical space and the engineering plastic component space. Those products are up for you on the screen. The plastics business is a smaller part of their business. That did a bit of a turnaround in the last year, and that's what helped them to deliver better numbers. So the problem is really in the top line. 180, 190 crores. Beyond that, we haven't seen higher top line out there. But in the last few years, the margins have gradually been improving. If you take a look at it, the last year itself, it was close to around 8.5%. Can they sustain that? Can they deliver better numbers than that? Only time will tell. Last year was a good year as well. So that's why the stock did come in terms of our filter. It delivered a net profit of roughly around 12 crores odd. Not just that, when it delivered better numbers and a better EPS, it paid out higher dividend as well. So the dividend payout has been more than 20%. Last year, 48 rupees is the EPS. They paid out close to around 10 rupees. And that's really been the trend in the last few years. And that's quite encouraging because the promoter stake is under 30% and yet they're paying out higher dividend. So, you know, that was one factor that did stand out. As the chart tells you on the screen, the promoter holding is only at around 28%. No big funds because it's such a small market cap. But you have, you know, a couple of HNIs in there as well. But moving on then, let's pull up the valuation picture. 150 crores. They did a net profit of around 12 crores approximately. So it's trading at roughly around 12.5 times approximately. But what was interesting was that they have investments as well as cash. You put that together, that's around 110 crores. But keep in mind these investments, I was looking through it, and majority of that is because in their group company, that's Lakshmi Machine Works, they have close to around 70 crores out there. So otherwise, the mutual funds and cash will be the remaining 40 crores odd. So we directly give it a 50% discount at least. You know, though it's 40 crores out there, you're giving a discount to the full 110 crores. That comes to around 55 crores. Then they delivered a net profit of around 12 crores. And then, in fact, the market cap is around 150 crores approximately. So that's giving you some kind of support in terms of valuations on paper. Keep in mind, these 88,000 shares may never be sold as well. So that's one factor that you need to keep in mind. The concerns, top line, not much growth in the last few years. Revenue growth, can they do more than 200 crores? Do they have the capacities? A high amount of their sales are with the group company. Lakshmi Machine Works, I checked out the annual report of last year. That was one factor, you know, group company sales, it's a little bit, you know, uncomfortable at times. And finally, cash you have in your books, how do you use it? Nonetheless, interesting one. Lakshmi Electric Control Systems, as always, it's not a recommendation. We're just trying to explain the companies to you. Back to you.
Okay, Nigel, thanks a lot for that. Yes, and you know, that disclaimer can't be overemphasized, and especially in this market, you really have to be you know, careful about mid caps. Perhaps the bigger theme this year has been about protecting your capital, but it was an interesting analysis that Nigel did. So that's why we presented it. We'll take a break, of course. Up next, we have just about 17 minutes left for markets to close. So some more market.
Welcome back. Still very, very range bound, 10,650. That's pretty much the pivot, and that's where things have halted. That's also where the recovery rally has halted for what it's worth. Well, let's also welcome in Mayuresh Joshi into the conversation. He's joining us from Angel Broking. Mayuresh, thanks for joining in. You know, I'll first start with some of the steel stocks that have seen an interesting recovery from lows over some over the course of last week, some today. What would your view be on the likes of a SAIL or a Tata Steel at the moment, or even a JSW Steel?
Afternoon, Survi. No, clearly, I think in terms of domestic steel demand, I think that is still holding extremely strong. On the other hand, you're probably looking at input costs probably increasing substantially over the past few quarters. So the EBITDA per ton had taken a hit, but that was aptly offset by the kind of volume growth that we witnessed. On the other hand, I think if you're looking at companies like Tata Steel, I think the ThyssenKrupp JV that we're talking about, I think that should reap benefits over a longer period of time, both in terms of the cost synergies that it can bring. But even its own expansion in Kalinganagar and the acquisition of Bhushan, I think that is going to shore up its debt substantially. But again, I think Bhushan is a highly margin accretive asset. So to that bit, again, I think the kind of leverage on the balance sheet probably should be evident. In terms of the other two companies as well, JSW Steel also embarking on an ambitious expansion program. What they've actually done in terms of their key acquisitions both in US and the European markets. I think that has given them a footprint in terms of these local markets and an entry point into these markets, specifically in a scenario where trade tariffs and trade wars are gaining super prominence. On the other hand, for SAIL, I think the kind of underperformance, more to do with the operational performance, I think that should largely be over the next few years, because the kind of capex that they've done and which has resulted in probably a lower EBITDA and losses on their balance sheet, I think that should start paying dividends. The other hand, also I think in terms of value-added products, CR rolls and oils that are probably expected to make, I think that is going to hold them in good stead. So I think I'm seeing an operational rebound in terms of SAIL. JSW Steel, even with the capacity expansion, I think the EBITDA per ton should show gradual improvement. Tata Steel should have a very strong domestic showing. So I think the whole recommendations probably still continues on JSW Steel, Tata Steel. But a contrabet, in fact, if somebody has a long-term view, can actually be Steel Authority of India.
Okay, let's get an insight into dealing room chatter as well. Then Nimish is here with Trader Talk. Nimish, been very volatile, some late recovery, but mid-caps again seeing selling pressure.
Oh, yes, Amit. So, the risk on clearly is playing out across Asia, and that's the part for India as well. But today, I guess, the feedback is that the volumes are on the lower side, especially on the institutional side, largely because the anchor markets are shut. So, maybe, not much in terms of participation coming in from the FI, so to speak. But clearly from the retail HNI category, the clear panic is playing out in the mid-cap and small cap. That's been the case today as well. So that's the space which is clearly under pressure and largely from the retail HNI category. In terms of individual sectors, metals are under pressure today, largely on the back of global weakness. Individually, there are a lot of mid-cap stocks which are under pressure today. Adani Group has stand out for punishment. Most of the Adani Group stocks are down 5, 7, 10%, essentially on the back of, I guess, some of the HNI category of investors selling out into those group stocks. But broadly, FIs continue to be on the sell side, but the volumes are largely on the lower side in today's trade.
All right, thanks very much for that, Nimesh, for those details. I mean, point couldn't be taken more, the mid-cap sell-off. I mean, there's so many stocks that are even down today. Something like a Dilip Buildcon, and we keep, discussing some of these names. What stars, and when they were rising, it was as if the stocks could do no wrong. I'm looking at a name which is on a 20% circuit today, and we've even stopped discussing these names, Anuj. Something like an 8K miles. Yeah. Again, end of 2017, the kind of notes that would come out, the talk of, specialized projects and products, etc. I mean, this stock is off the radar, and how? If you look at a 2-year chart, then the pain is very, very evident.
And, I tell you one thing, 8K Miles is a company which, a lot of, bluest of blue chip mutual funds.
Yes, institutional investors would talk about it.
Institutional investors in their portfolio. Same was the case, by the way, with Wakarangi as well, of course, a few months back. And of course, I don't know, when you're looking at a stock like Dilip Buildcon, for example, I know sometimes there's a temptation to look at how much the stock has fallen. But if you just reverse the clock, just 12 months back, the rally that preceded before that, from 200 all the way up to, I think 200, 300 it was, I could be wrong, but, the move towards 1200 or thereabout, obviously in that context, just look at that. I mean, if you got in this stock 1 year back, you're still up 41%. I don't know what the market right now is doing is a bit of a mean reversion, especially for a lot of stocks which had gone up a lot. We saw that play out with Venky's, for example. Again, you would look at the stocks from the start of this year and you believe that, you're making a lot of losses. That's the Venky's chart, of course. But you see a 12-month chart, you're still up 31%. Now, in a 12-month period, if you're up 31% or 46%, you are still making good money. That's, that's an important point. What this market right now is doing is it's eating out some of the, or, flushing out some of the excesses of 2017. 2017 was an excess year, and 2018 is about correcting that. So that way, I think you really have to be very careful about choosing the stocks that you are. And just one more point. Today, of course, intraday, we had that move because of that Sunil Mehta committee report, and the other overall move still remains global in in nature. Right now, what we have is a Dow future which is down about, say, 200, 250 point. Asia was, of course, down. By the way, Hang Seng was not trading today, so it will trade tomorrow. So the mid caps, of course, have their own problems. Now the issue is for the large caps, the global context is turning a bit awry. And I think that is something that you've got to keep an eye on, of course.
Absolutely. So on that note, it's time to take a quick break. We will come back, get you some more market opinion and count down to this Monday close. Okay, some more stocks on the move. United Spirits is attempting a recovery from the day's low. It's still at the bottom half of the screen. That means it's still negative in red territory. On the other side, the pressure is still, very persistent on something like a JSPL. That is a stock that's still down 8%, even as we speak. Mayuresh, we were just discussing a couple of stocks before the break, Anuj and I. I want to get your specific call on Dilip Buildcon. What's your view?
So I think I concur with Anuj. I think the sentiments probably have become a lot more worse at this point of time. And though the management has given clarification both in terms of the expected cash infusion from Shrem over the next 12 months, along with the execution that they're probably expected to deliver. Strong execution has been delivered in the past year as well, Surabhi. But again, I think expectations in terms of how much they can execute is going to be on a very strong footing. But I think the sentiments have probably become very, very sour at this point of time. Our probable pick within this space is still a KNR Construction. Even this stock has corrected significantly from its highs. But our belief is that the mix of order book, both in terms of bought and the irrigation projects that KNR has, along with the EBITDA margins that it posts because of good execution, and again, I think the kind of balance sheet dynamics that it possesses on a consolidated basis. So very, very negligible debt equity. The working capital requirements are very, very low. Even if you look at their gross block and the expectations of sweating of these assets, they're substantially going to add to revenues over the next few quarters and years. So again, I think pick and choose. I think KNR Construction probably remains our top pick.
Okay, well, on that note, let's bring you some more market opinion. Earlier in the day, we caught up with Pramod Gubbi, who's head of equities at Ambit Capital, got his take on the current consolidation patch and the big sell down in mid-caps.
After 2017, I guess we had to expect some sort of mean reversion, consolidation in the markets. So obviously some sort of profit booking was on the table, but I guess it's coincided with the sort of trend that we've seen in global markets in terms of both the tightening liquidity and the trade wars all contributing towards a significant appreciation in the dollar. Alongside that, we've seen the sort of repositioning of the local funds away from small and mid caps to large caps. So although on a stock specific basis, you are seeing some sort of value emerging, but I think, given the sort of momentum on the downside, we may not have seen the bottom in that space. So I guess that trend is likely to continue, where we'll see broadly stable trends at the large cap index level, but continued pain in the small and mid cap space. If the currency markets continue to take a beating and that feeds through imports into our own domestic inflation story. So the impact on fundamentals is through that route rather than any direct exposure to trade wars. Local macroeconomic triggers also look negative. Emerging market flows, trade wars, negative. Potential sources of political uncertainty as we see some of the state elections coming through. Again, not particularly great from a volatility standpoint. In an election year, fiscal deficit is also a thing to watch out for, which is not looking great, particularly given where crude and the rupee are. A combination of both can put more pressure on that.
Okay, well, let's take a look at some of these individual names. Ending at the lowest point, Shrey Infra, we spotted the stock in the morning as well. That one is now ending 7.5% lower. It's in a bear market of its own, and seeing this trend on Friday, you saw that, and today also it's ending 7.5% lower. TV18 broadcast is down 10%. Standard disclaimer, of course, owner of the channel that you're watching, but big downtake on that stock and on large volume. So that stock is getting quite a bit of punishment right now. And then, of course, the ADAG group, Reliance Capital, is down 5%. Just Dial is down 5%. Infibeam, which really has been the curious stock, that also down about 4.5%. Ashwani, your thoughts on Shrey Infra? I mean, we spoke about it in the morning, but just one-way slide on that stock.
See, everything that is two-digit, questionable, etc., that's going vertically down. So Shrey Infra, now the 200-day moving average is 92. So fairly oversold, but can get sold even more because now Bajaj Finance, Bajaj Finserv, etc., are also coming off high rates, is a death knell for all sorts of NBFCs. So possibly more downside. So certainly not a stock that you should consider. Any rallies to 70 can be again used to sell.
Okay. Mitesh, what's your verdict for the day then?
Anuj, as I said, I think trading the index has not been a very smooth activity, purely because of the lack of the follow. So I think we continue trading with individual stock specific bias. Till now, IT has been more on the positive side, but with results coming in, I think I would be tempted to take profits on long positions, especially on Infosys and TCS. But that apart, I think the key here could be the mid-cap index and the auto index. I think both these indices are at critical support levels. If they start breaking below them, then I think we'll be in trouble. So, but that we'll know in the next couple of days.
Of all days, I mean, on a day like today, guess which stock is up 13%? Matrimony.com. We did speak with the management. Of course, they gave certain optimistic targets about their business going forward. But anyway, 13-14% ending at the day's high in a market like this one. We've just got about a minute left before the day closes out. So, Anuj, I mean, how will you classify this? It doesn't tell us much because, again, I mean, as you've been saying, Ashwani's been saying, it's failing both ways. I mean, your range of making money, I guess, is also diminishing in the day.
This is a market where, a lot of people say death by 1,000 cuts. There's one market which has a one fell swoop, you have one decline and the market's fine, excesses are flushed out. You see this market for last, day by day, week by week, month by month.
Stock by stock,
by stock, sapping energy, showing classical traits of, a broader market, bear market. I mean, and again, I put it in context of a massive bull market that we had in 2017. So broader market isn't a problem. The Nifty and the Bank Nifty, the issue is that there are 4 or 5 stocks like the HDFC Twins, Reliance, TCS, today Infosys. One of them just, puts its hand. They keep taking turns and somehow the index is not falling. But if you look at the broader market, you look at people's portfolio, you look at mutual fund NAVs, and one thing is certain, that this is not a 10,650 market. This, is a 10,000 market if you're charitable, and in certain cases, it's a 9,500 market. Of course, we're not talking about the Manpasans and the Bakrangis of the world, where, you're talking about a completely different market. But there are problems beneath the surface. Anyway, for today, let's talk about stocks which made a move. What dragged the markets today? Today, actually, HDFC Bank was on the way down. After a long time, that stock made a move lower. So 2% lower is what we had on HDFC Bank today. That was easily your biggest drag on the market. It had Reliance for company, Larsen & Toubro, ITC, Tata Motors among the heavyweights. The biggest Nifty losers were Bharti Airtel, NTPC, Hindalco, Adani Ports, Indiabulls Housing and Grasim. But none of these stocks really has the kind of weight that the others that I spoke about earlier have. On the way up, really the stock of the day was Infosys. 2.5% higher on that stock. It's up 28% for the year now, up 9% for the month. It's making up for that underperformance with TCS and how. I mean, this month, it's outperformed TCS by quite a bit. Or this week, over the last 4 or 5 days, it's outperformed TCS. Year to date, of course, TCS still remains the bigger gainer, up 37% versus 28% for Infosys. And SBI, of course, from the low point, did recover quite a bit. But all in all, Surabhi, again, a day of, mid-cap underperformance.
Oh, absolutely. There's such a long list of losers out there. The index is down about 100 points, but if you go down to individual names, if I start with some of the bigger stocks, then you're talking about, for instance, Adani Enterprises down 8%, JSPL down 7 to 8%. Actually, on metals, one would have to say that attempt at a recovery didn't quite work out. So JSW Steel is down 4%, Nalco is down 4.5% as well. There's been selling on Indiabulls Real Estate, 5% lower on that stock. Avanti Feeds, another 5% gone. Then something like Shrey Infrastructure, 6% gone. 8K Miles, at one point in time, the institutional fraternity is darling, 20% lower circuit on that stock today. TV18 Broadcast has lost about 9 to 10%. Just Dial is down 4 to 5%. The duo of PFC and REC, not a very good day for these stocks, between 3 and 4% down on both PFC and REC. What else? Ambuja Cements has also lost some of the sheen. Remember the cement rally of last week? Well, today it was a down day for these stocks. Idea is down about 4%, Interglobe Aviation 4%, Granules 4%. It's just a long list of stocks out there. M&M Financials, L&T Finance. I mean, just cutting across sectoral lines. Sectors really don't matter in the mid-cap market right now. DHFL, count that as part of the NBFC list, on the way down, 3% on the lower side. Bata did hit a fresh 52-week high today, but the final close has been negative even on Bata. 2.5% down. Indiabulls Housing Finance or even NBFCs, they've not really managed to find buyers today. On the upside, the one stock that's really interesting is CG Power. Now, the market is awaiting with bated breath the outcome on their Hungary operations and whether that sale is going to go through or not. Maybe some anticipation of an announcement, 5% up. Some of the brokers slash NBFC stocks like JM Financials, Motilal, these stocks were up and about. Cadila Health has managed a 2.5% up move. Jubilant Foods saw buying in the dying moments of trade, 2.5% up on Jubilant. And then you have some of the material stocks like HEG, Graphite, Rain Industries. They continued their northward march. But other than that, I mean, it's not a mid-cap market that feels good at all, Anush, because we're now talking about the bigger stocks, the larger blue-chip mid-cap, so to speak, that are also seeing pressure on a daily basis, right?
Yeah, I think today even Bajaj Finance and Finserv towards the end did see some selling. So that way, I mean, the things have been a bit rough. Ashwani, final thoughts then. Stock like HDFC Bank, you reckon it could correct from here now? Today, of course, it was down about 2%.
For HDFC Bank, correction can be, basically towards the 50-day moving average. That's about, 20 thereabouts. But it's looks like, several large stocks by rotation are getting into correction. Bajaj Finserv is now below 5,800. Reliance corrected for a few days. But there's enough that is holding up the market as well. So I don't think that overall impacts the market. Again, market of individual stocks, if you get some gains on the index, better to take them off. But overall, the range expansion of the contraction that we were hoping for, that has not happened. Maybe that happens on another day with bigger triggers. But this will be the way the market will trade. You will not get 500 on Bank Nifty or 150 on Nifty. So each time you get 200 plus on Bank Nifty, maybe 80 to 100 on the Nifty, it's better to take it off because something will help the market be range bound.
Okay, and Mitesh, just quick thoughts from you as well. How would you approach things tomorrow?
I think so. We in the short term remain stock specific. I think I will still wait for maybe the signal will come from Bank Nifty. If you look at, in fact, while the Nifty did violate that 10,700, 830 range, the Bank Nifty is still within that 26,100, broadly given take 20 points, and on the upside 26,800 range. So that 700 point range in the Bank Nifty, once that breaks out, that will also possibly pull the Nifty in that direction. So for the time being, very stock specific, FMCG, IT on the long side till yet, and the other stocks, you are trading with individual chart bias. I think that remains the case till we approach the result season.
Okay, all right, gentlemen, we'll wind it up on that note. Thank you very much for taking us through market close. Another down day to start the week this Monday. We'll take a break. On the other side, we get you an excerpt from our conversation with Bernard Mayer, global CEO of Skoda, on their India investment plans. Welcome back. Well, our colleague Utkarsh Chaturvedi caught up with Bernard Mayer, global CEO of Skoda Auto, and asked him what is new in the Skoda 2.0. Take a look.
Skoda itself has been on this market now since more than 17 years. And currently we are playing not that decisive role. We are seen as a very well-established, high-value brand in India, but we see that in this stunning market we do have a lot of more opportunities, and this will be covered by the India 2.0 initiative.
So let's speak about the investments first. What kind of investments are we really looking to put in? What can be the timeline, and which will be the areas where we will be investing money?
Well, we decided together with the group that we will start this approach with 2 brands in the very dynamic segment of the mid-size SUVs. You know that we have discussed 1.5 years ago whether we should partner with one of the big competitors here in India, but then the authorities decided to change the requirements. But stage 6 comes into place from 2020 onwards, and this is a completely new story. Right. And this is why we said we have a very well-established platform already, probably the most competitive platform in the world, the MQB A0 of the Volkswagen Group, which is already coping with all these requirements, which are necessary here in the Indian market. And now we elaborated a couple of months to really come down with the cost that we are really be able to bring a car which is competitive on the one hand, but also on the other hand be the most reliable, the most high-end quality product in the market.
Any ballpark investment figure for the Indian markets?
Well, we decided to invest, and this is something we will announce today, 1 billion euros in the next 2.5 years. And this will take place here in India starting from now on.
So will this be only into manufacturing, or some of it will go into the R&D space as well?
We are already under construction with our R&D project house, which will be based in Pune, and we are going to hire already people for that investment, and it will be starting already in the course of this year.
Well, moving on, the NSE has signed a strategic partnership agreement with NASDAQ for a whole host of business operations. Earlier, my colleague Prashant Nair caught up with Adena Friedman, President and Chief Executive Officer of NASDAQ, along with Vikram Limai, MD and CEO of the NSE. Here's an excerpt from that conversation.
One of the things which is being talked about is essentially, in a way, cross-listing. I mean, having the NASDAQ product here in India, having the NIFT trade on the NASDAQ. Was that discussed? I mean, have you thought about it?
We've been looking at a lot of different areas of opportunity, including the opportunity for us to look at dual listing or cross listings, as well as the idea of index, looking at indexes and how we might be able to list our indexes here and vice versa. But I would say that that's really just the beginning of our dialogue. What we really want to make sure we do is really talk with the brokerage community, talk with the investor community, and the corporate community here in India to make sure that we are thinking about ways to collaborate that will better the Indian marketplace, as well as talking to the regulators to understand how we might want to set up a regulatory infrastructure within us and in India to be able to support that. So
but
that's the beginning of the
do regulations right now prohibit that from happening? Because there is huge interest, I mean, in the NASDAQ constituents, in the NASDAQ itself. I mean,
no, the regulations don't prohibit it. Okay. It just might make it so that to go through the process might not be as efficient as possible. So we'd like to make sure that we look at ways that we can make that process more efficient for corporate clients. And from an index perspective, we just want to make sure that we find a way to drive demand into those indices, whether here or in the U.S.
Vikram, I mean,
no, I would just add to say that when we approach a client as partners, it's more seamless for the client as well. So right now the regulations say that if you're registered domestically, you've got to list here, but nothing prevents you from listing offshore as well. So and it's not applicable to every company, right? And offshore listing, you need to be of a certain size scale in order to actually get the kind of attention that you want. Otherwise, you're orphaned in the offshore market. So that's not good for anyone. But if we approach an appropriate client together, it's a lot easier for the client as well, because he can deal with both seamlessly rather than having to deal separately. So we'll have to explore that in terms of how we move forward. But again, it will be for a targeted set of companies, because it's not applicable for the entire range of companies.
What about the NSE itself?
In terms of listing offshore?
Yes.
No, that we haven't contemplated at this point. It will be only a domestic listing.
The markets themselves, right? I mean, what is your view? I mean, we've had this expansion which has been going on for a while. I mean, actually 7-8 years now. And markets around the world have benefited hugely by this global expansion. Some believe that we've already seen the peak, and we've sort of hit a peak and now starting to trail off. Do you believe that?
I think that, well, it's impossible to predict the market. So, but I would say let's look at the ingredients that exist today. So, particularly coming into 2018, we had the benefit in the U.S. of the tax reform, which really created a huge lift across the ecosystem. But on the back of that, we also had growing growth So GDP growth was starting to expand and grow at an accelerated rate. You had record profits coming in. So there was really core fundamental reasons why the markets were continuing to expand and show strength. And then you also saw that again in Europe as they were starting to grow. And the emerging markets continue to be a high growth sector. So I think that the global growth environment that we're in, the fact that the companies themselves are demonstrating those fundamentals that allow for that growth and that expansion has supported the overall expansion of the markets. This year, I think you're starting to see, some of the political and macroeconomic issues also kind of coming into the market, but it's still on the back of very strong growth. So the question is, over the next several months and quarters, how is that going to continue to manifest itself into the fundamentals of the companies that will then drive, obviously, the performance of the markets. But we certainly see, in general, definitely strong undercurrents that are supporting the valuation.
Okay, well, that's the NSE and the NASDAQ getting into the partnership. Moving on to a big CNBC TV18 exclusive. In his first interview to the media, Ravi Venkatesan, non-executive chairman of Bank of Baroda, highlights the main problems that PSU banks face at the moment. He also provides possible solutions. Take a look.
I think the first thing is to fix governance, because if you can't fix governance, you really are pouring money down that leaky pipe.
And for fixing governance, you need to reduce government stake, you think?
Look, I'll come to that. So the first job is you have to empower the boards. The board has to have the ability to appoint others with the right expertise. It has to have the power to appoint the CEO, the executive directors, shape strategy, give them their targets, hold them accountable. This is just the most foundational aspect of governance, and we don't yet have that.
Compared to you as a chairman of the Infosys board and of the say Cummins board, if you compare your position here, you think that you are not empowered enough.
It's not just me as a non-executive chairman. The board itself is not empowered to do these things, and I think that is just foundational. I think the second one is to address the talent issue, because I think you can have all the strategies and ambition and the opportunity. If you don't have the right people in the right roles, you're not going to get very far. And here what we have, as I said, other than State Bank, you do not have a systematic ability to attract the best or a competent person for the role of the MD, EDs, etc., and give them enough tenure. You don't have the ability to recruit from outside laterally, even into specialist positions like technology or risk, etc.
You can't appoint them?
No, there is great difficulty in the system. So now we are working with the government as a group of public sector bank chairmen to try and get a framework that would allow this. So these, I think, are just the two most fundamental improvements without which I cannot see progress being made. If there's a third one, it would be to eliminate fear in the system. Again, the Nayak...
That's a newfound fear.
It is not a newfound fear. It was addressed in the Nayak committee report in several pages. I actually, before I took this and had the courage to take it, I read the report and actually met Mr. Nayak. And there are several pages on the fear of CBI's,
yes, the 4 Cs, yes.
Yeah, CVC and all that. I think the recent events have conspired to amplify that fear by at least 2 orders of magnitude. And it's not just management which is now scared, even non-executive directors are getting pretty apprehensive. Now, this fear, it's really paradoxical. On one hand, all this system of accountability doesn't seem to slow down frauds and bad lending decisions. And on the other hand, it creates paralysis. So I think this is incredibly dangerous and debilitating.
All right, moving on, former cricketer and India under-19 cricket team head coach Rahul Dravid has added another feather to his cap. Dravid enters the ICC Cricket Hall of Fame 2018. He becomes the 5th player from India to be named in the ICC Cricket Hall of Fame. Former captain of Australia Ricky Ponting and retired England woman wicketkeeper batter Claire Taylor also have been inducted into the ICC Cricket Hall of Fame. Okay, so that's the wall. Steady as ever. On that note, let's get you a quick programming reminder as well. Do catch in conversation with N. Chandrasekharan, chairman of Tata Sons, along with the CEO of ThyssenKrupp. They're talking about finally sealing the Tata Steel ThyssenKrupp deal. All the details coming up live and exclusive only on CNBC TV18. Quick break right now. The commodity market action of the day coming up with Manisha Gupta.